Good morning, guys. Welcome back to the channel. David here with another cryptocurrency update. First of all, as always, I want to start by thanking our new subscribers and all the commenters in our videos. If you're one of the people who likes and shares these videos, you are seriously important to this community. You're one of the rarest gems, and you're something that should be cherished and hodled. I hodl all of you guys, all the subscribers that are here on this channel. I'm going to hodl you. So thank you guys for joining. I had a couple of meetings over the last few days. One of them, not meetings, lunch dates. One of them was with the stockbroker, somebody who used to work for multiple stock agencies back in the early 2000s. And I had the other meeting with a doctor, a private mdvip doctor, who, along with his friends, is a very affluent person and has done extremely well for himself. What would you assume that they had to say, the stockbroker and the doctor? This is like the beginning of a joke, but it's not a joke. It's actually quite serious. The broker sat there and listened while still being critical of my concepts and the direction, right? Giving me ideas of what is holding back the market and mainstream investors' mind frames when it comes to strategic and educated investing. So my friend, Jeff, the stockbroker, was going through bullet points and facts and explaining to me some of the mentality behind traditional investors and the targets and the data that they need and want to feel comfortable in making an investment. The conversation we had was very educated. For the most part, the conversations that I have with him are very educated. He's always giving me ideas that are outside of conventional ideas. Now, nothing in cryptocurrency is conventional, but we have our ideas of the direction that this market is going and the utility that we want our tokens to get. Now, when the conversation started with the doctor, he started the conversation. I brought it up. I said, we were standing at the restaurant and I was looking at the countertop in front of me and it said Visa, MasterCard, Discover, American Express. It told you all of the ways that you could use to pay with your credit card. And I didn't make a joke, but I made a statement that said the Bitcoin logo. And again, I'm an XRP supporter. I'm not necessarily like a Bitcoin fanatic. But I told him, I said, the Bitcoin logo is going to be there one day. And it's going to be so, it's almost going to be like invisible because you walk up to the countertops and you don't even necessarily see those signs. You don't see the fact that it tells you that it takes MasterCard and Visa and Discover and American Express. You know that for the most part, when you go to a gas station or you go to a restaurant or you go to the movies, that they're going to accept your credit card. So you wouldn't even look at it to see what they accept. So the day that the Bitcoin logos are on every one of them, it's just going to be another blind moment in life where you don't really know what it is. You don't see it. It just passes you by. That's why we discussed we're going to go from a point where we're going to be investors to customers. And if you want to be a customer, just keep standing on the sidelines and don't do anything now. But if you want to be an investor, if you want to be somebody who gets in, I've already told you, not on the ground floor, because this is not the ground floor. Ground floor was at fractions of a penny for XRP. Ground floor was at $1 or $2 for Bitcoin. So I told him about the Bitcoin obituaries, the doctor, and that they've been constant since Bitcoin's inception. One of his wealthy friends, one of the many wealthy friends, and I'm sure we all have people that have done extremely well for themselves up until this point. Now, that's not to say that we're jealous or envious or that we want money from them so that we can invest into cryptocurrency. No. The opportunity to sit in front of somebody like that is extremely important because they have the key to the other part of this puzzle that we are not necessarily focused on. What is it that makes them tick? What makes them put their money in? The second part of my conversation with him is almost where I wanted to shut down and pull back, because I do get aggressive sometimes when I have these conversations with people who are so hard-headed that they don't listen and they don't hear anything. One of his friends, back, I would imagine, we didn't get to him into the time frames. I didn't discuss it with him. But back during the bull run, one of his friends put in $100,000 into cryptocurrency or to Bitcoin. Whether or not he knows if it's Bitcoin or crypto or the alts or whatever, he probably has no idea. But his friend's portfolio value as of this point is $20,000 from 100. That's an $80,000 loss. And now this is where the joke comes in. I made the joke and I said, well, that's not that bad. And his reaction was like, well, what freaking planet are you living on where that's not that bad? And then once you stand back and think about it, it is bad. That's a horrible loss. But his next sentence was really important, because he led into saying that the Bitcoin price is almost low enough that he could just buy some as a joke. Now, this instantaneously upset me, because I'm sitting here giving over information, trying to explain the validity of the markets and the direction that this is going. And it almost felt like an insult, in a sense, not only to myself, but to the companies that are going every single day so far and so hard against the mainstream directions of financial understanding. And like, if you were going to invest your money into traditional stocks, cryptocurrencies is almost the complete opposite end of that. And we're going to get into that in a little bit. But if you were ever wondering how the fake news can report the same thing that the doctor is saying, like Wall Street is shelving its cryptocurrency dreams, or delay after delay after delay, right? It's like the day after Bakkt raises $180 million for a small percentage of their company. Like, imagine that Bakkt went on to Shark Tank and you've got Mark Cuban and Barbara and Robert and all these guys sitting there listening to the pitch from Bakkt. And that would be like the Shark Tank investors buying into Bakkt's idea without a working business model. It's only basically a business plan and possible customer acquisition opportunities in the future. $180 million for a small percentage. Now, if you quantified that, if you tried to now give an entire value to the company, we would need to find out what percentage they sold for exactly how much, and then we could find out what the valuation of the company is itself, the company that they sold a small percentage to. But the day after that we get this $180 million, all these reports come out saying that everybody's shelving their ideas, and maybe they're shelving their ideas so that they can raise more money. That is pretty interesting. What we're going to do now is, as I went on to the Yahoo Finance charts this morning, I'm trying to understand, because the stockbroker explained to me a couple of different things, and that is that traditional investors, they want the data, they want the info, they want to be able to see what's going on. So I pulled up the charts for Apple. And once I did that, I started to do a comparative to what Apple charts look like, what it includes, and what it doesn't include. I'm going to go ahead and put in a couple of pictures here right now in this video. I don't know if I'll remember to do it, but just so that you can see that on the charts, there is multiple sections on the traditional stock charts that do not exist on the cryptocurrency charts, okay? Like beta. So if you compared the two charts, what exists on the traditional stock charts that does not exist on the crypto charts? Why does it exist, and what does it mean? The first thing is beta, okay? Now, beta is the measure of the company's common stock price volatility relative to the market. Okay, so that's one section that exists in traditional stocks that doesn't exist on the cryptocurrency charts. The next is the PE earnings, which is the price earnings ratio for the most part. That's the ratio of the company's stock price to the company's earnings per share. The ratio is used in evaluating companies. The ratio is used in evaluating companies. Then you've got earnings per share, which is EPS. Now remember, all these things that I'm reading to you right now, they don't exist on the cryptocurrency charts. It does not exist. What it is you've got the earnings per share, which is the monetary value of earnings per outstanding share of common stock for a company. In the United States, the Financial Accounting Standard Board, the FASB, requires earnings per share information for the 4 major categories of income statement, which is continuing operations, discontinued operations, extraordinary items, and net income. Okay, and then we've got earnings date, which is basically the earnings announcement, which is an announcement. An earnings announcement is an official public statement of a company's profitability for a specific time period, typically for a quarter and or a year. An earning announcement typically occurs on a specific date during earnings season and is preceded by earnings estimates that equity analysts issue. The next is dividend yield, or the dividend price ratio. And that is the dividend price ratio of a share is the dividend per share divided by the price per share. It's also a company's total annual dividend payments divided by its market capitalization, assuming the number of its shares is consistent. It's often expressed as a percentage. Okay, then we've got the ex-dividend date, which is also known as the reinvestment date, which is an investment term involving the timing of payment or dividends on a stock of corporations, income trusts, other financial holdings, both publicly and privately held. If a sale is before this date, the dividend belongs to the new owner. If on or after the date, the seller is entitled to the dividend. The 1-year price target is the projected price level of a financial security stated by an investment analyst or advisor and includes assumptions of future activity. It represents a security's price that, if achieved, results in a trader recognizing the best possible outcome for his investment. Okay. I want to, if we go back, understand none of those things exist in cryptocurrency. You can't go on and get your price earnings ratio for Bitcoin or your earnings per share for Bitcoin unless you were to crunch all those numbers. If you were to do all that number crunching yourself, it would be amazing. That'd be great because you can go back and check the charts. A lot of these things are not companies, so you could call them companies. A lot of them are technologies or platforms or I don't even know, distributed ledgers. I mean, you could call them anything. So a 1-year price target is not going to exist in cryptocurrency. The dividend date is not going to exist unless you're in a crypto that gives you dividends. The 1-year price target, not going to exist. The earnings per share, not going to exist. There's never going to be a time when on Yahoo Finance, all of these things are filled in up until the point when this becomes real. And when I mean real, I mean to the point when XRP and Bitcoin and Cardano and Litecoin are all traded on the stock exchanges and have the same regulation, the same credibility, the same insurances backing the funds that the regular stock markets have. Well, as we round into the next section of this video, the Goldilocks and the Black Swan events. Coinbase listing would be such a Goldilocks event. A lot of you guys hate Coinbase. If they listed XRP, it would be huge. There would be such an extreme inflow of volume, not only onto the Coinbase platform, but it would increase the volume of XRP exponentially because you'll have instantaneous access through one of the world's biggest exchanges from fiat to XRP. I believe one of the reasons Coinbase is holding back the XRP listing is a couple of reasons. One, I think Brian Armstrong, the CEO of Coinbase, absolutely hates the Ripple team. No question. He has an extreme dislike for RippleNet and for XRP for that matter. They're neighbors in San Francisco, so maybe they have some kind of turf war going on. Or maybe Coinbase in the future has ideas of trying to be a little bit more like XRP, a little bit more decentralized and made for providing cross-border transactions from Coinbase UK to Coinbase America. Those are going to be things that possibly happen in the future. The second thing is regulation. Obviously, we all know that regulation is holding us back. Many people do business with enemies. Name something down below where you know of a country or a business or an entity, maybe Pepsi and Coke, or Russia and Germany, or China and wherever, or Korea and North Korea and South Korea. Comment down below a place, a time that you know where enemies have to do business together in order to move both their situations forward. So if you think that Armstrong, just like Digital Asset Investor has said, if you think that Brian Armstrong is going to be able to keep Ripple out and XRP out of the circle of friends, that's not possible. The investors at Coinbase, just like DAI said, will literally escort him out the building by his britches. They will pick him up by his pants and walk him out the door and say, you know what, you tried. It's just like the CEOs and the presidents of these major exchanges that are getting evicted from their spots because their exchanges have just been flatlined over the last year. Everything's been flatlined, but that's okay. So, like I said, give me some examples of enemies doing business together. I'd say not only is Coinbase waiting, but I think the rest of the world is waiting for not only the SEC, but the Department of Justice and the FDIC and everybody to come forward and validate this technology. Once this clarification comes for traditional investors and large institutions, the floodgates will open. Mark my word. A Black Swan financial event. Now, obviously, you guys did not click this video to get some information about what could go wrong. We're in this space because we believe that it's going to go right. We have to know that things can happen and transpire in this industry that are not conducive to ultimate growth. A Black Swan financial event. EMP. These are outlandish ideas, I know. I'm not saying that any of this stuff is possible. A banking blackout caused by hyperinflation or a banking holiday, or something caused by hyperinflation, would not be good for crypto and currency. Or some war on internet access. Yeah, the government has all the power to shut down exchanges. If you don't think that the United States government can limit your access to Binance or to Coinbase, or to put so much pressure on them that they have to fold, you're misleading yourself. If a government feels like they're losing control of their fiat currency because of blockchain and or cryptocurrency technology, an all-out war will be started. No question. But that doesn't mean that any one of the participants in this all-out war is just going to vanish. It means that you have to understand why you're choosing to stand in the middle of that war, or why you're going to choose to stand on the crypto side or the fiat side. If you asked me, I'm standing in the middle, because I understand that there's literally such an important link between the past and the future. Which means if we don't utilize the fiat currency before it becomes a lesser commodity, then we'll lose the access to transferring that value. It would be like if you waited too long to sell a cryptocurrency that you knew was going to be delisted from Binance. If you waited just long enough, you would have your shares stuck there. There was a coin that I bought a while ago called Triggers, and Triggers, amongst many other coins, got delisted from Coinbase. Not from Coinbase, I'm sorry, from Binance. Now, I didn't react fast enough, and the valuation plummeted, and I stopped having access to trading it, and so it's basically stuck in the ether. It's time for us to pay attention. It's time for us to know the projects we're investing in, why we're investing in them, why we're going to be taking our money from our 401ks, putting it into silver coins or putting it into cryptocurrency. We have to know why we're making all these moves. And if you were a traditional silver investor or gold investor, and let's say like me, you pulled all of your silver coins out and you put it into cryptocurrency, and cryptocurrency has just completely devalued itself since that, and now you're standing here looking with a bag of cryptocurrency and no silver, and you're watching the price of silver and gold exponentially increase every day. A few weeks ago, silver was trading at $13, is trading at $15.65 today, which is a huge move. It can make you feel really sour, and it can make you feel like no matter what you do, the decisions you make are going to be leaving you behind the ball no matter what. If I could explain to you how sick at moments I have felt looking at the valuation of the cryptos that I possess and just thinking about the amount of silver that it took for me to purchase that, I'm trying not to freak myself out, because as a believer in this technology, the exponential price increases that I believe will happen when this market turns back on will fly past the 20 or 25% that the silver is going to go back up, and the time that I'm waiting for crypto to make its move so that I can reinvest a portion of my assets back into a hard asset, silver, gold, platinum, palladium, oil, things like that. If you guys have anything to add to this conversation, please do leave it below. 21 minutes and 11 seconds. What an amazing morning. If you guys made it to this point in the video, thank you so much. Please do subscribe. Please do share these videos with your friends and family. And understand, the only way for cryptocurrency to be taken seriously at this exact point is for us to start treating them not in a sense exactly like traditional stocks, but if we're going to be taking information to traditional stock investors or real estate purchasers, people that are indoctrinated with this typical investment pattern, we have to be able to take this information to them in the way that they want to see it. And the way they want to see it is in data. They want to see the charts. They don't want us to be speculating all over the place or saying XRP is going to the moon. They want to know where it came from, what it's done, and where it's going. And they want to know it on the charts. Pull up the charts yourself. Go to Yahoo Finance and take a look. Like I said, I'm going to try and add a couple pictures into this video of the charts just so that you can actually see the differences. But do it yourself. Do your own research. Contact somebody that you know that trades stocks, or somebody that owns a lot of real estate, or somebody that makes a good amount of money that you can try and not seek advice from, but pick their brain and find out exactly where they're standing and why. Thank you guys, and we'll see you in the next episode.